A lot of you have been around long before XRP's price started taking off recently. And if that's you, let me just say, congratulations. Seriously, you got in before the big players did. That alone could end up being the reason you build serious wealth. Even if you only started buying XRP not too long ago, you're still ahead of the curve, well ahead of the institutions that are just starting to wake up to XRP's potential. I get it. When you're new, it can feel like you're late to the party, but give it some time. Your mindset changes the longer you're in this space. Think about it. If you're still here in 2035, just imagine telling someone then that you bought XRP back in 2025. They'd wish they were in your position. But before we dive any deeper, let me be clear. I'm not a financial professional. I have zero formal training in finance or investing, and none of this should be taken as financial advice. Please don't make any investment decisions based on what I say. I'm just a crypto enthusiast who enjoys talking about these topics on YouTube as a hobby, just for fun. Now, with that said, I think you'll find this video especially intriguing. I want to talk about something I feel isn't being discussed enough in the XRP community. It's a trend I've been noticing, and today I want to walk you through exactly what I'm seeing. Since about November, XRP's price has been climbing, but this time, it doesn't look like it's driven by your typical retail crowd or short-term traders. This move feels different. In fact, I strongly believe we're seeing the early stages of institutional capital flowing into XRP. And guess what? There's actual data that backs this up. No hype, real numbers. The XRP rally that kicked off after November 2024 has really picked up steam lately. And if you've been paying attention, you know the big spark behind it is institutional money. We're talking about funds moving in through corporate treasuries, large-scale whale accumulation, increasing access through ETFs, even though we still don't have a spot XRP ETF in the US. And, importantly, strong on-chain activity tied to real-world asset tokenization. That last part? It's massive. I've been hammering that point lately for good reason. One recent article breaks this down, citing analytics from platforms like Sentiment, which I personally follow and trust, as well as crypto news. They point to a number of factors: increased whale transactions, buzz around potential ETF developments, expanding institutional partnerships, and rising chatter across social media that reflects growing retail interest. Now, to be clear, retail activity is absolutely present. In fact, there's a ton of it. But when you look at the volume of capital actually driving this move, it becomes clear that institutional investors are leading the charge. That's the engine behind what we're seeing right now. And that's a game changer. Let me explain why. If this rally is truly being powered by institutions, we may be in for a cycle that absolutely blows past anything we've seen before. In previous bull runs, retail traders drove the price through emotion and hype, which, to be fair, can move markets, but their collective firepower just didn't have the scale to push things as far as we're seeing now, and that's backed by the data. Now here's the twist. Later in this cycle, it's going to be retail euphoria that sends XRP flying into the stratosphere. That's when prices go parabolic. And when that happens, many of the early entrants, including institutions, will start taking profits. They always do. And they'll be cashing out right when less experienced investors are convinced the market is just getting started. It's the same cycle every time. Think about what happened back in 2017. XRP was worth half a cent, and within a year, it rocketed all the way up to $3.35. That explosive growth? That was 100% driven by retail investors. Institutions weren't even playing the game back then. But this time is different. This time, once retail mania hits full throttle, the outcome could be massive. We're not just talking about more money. We're talking about more people. The market is way bigger now than it was 8 years ago. Right now, XRP is already holding above $3 before retail really gets involved. That price level is being set by institutional demand. So when the broader public floods in, it's going to be next level insane. Things could go absolutely nuts. To give you a sense of how far we've come, consider this. Back in 2017, research out of Cambridge University estimated the global crypto user base was between 2.9 and 5.8 million people. and most of those were using Bitcoin wallets. Just imagine how small that number is compared to today's market. The part I've got highlighted here is what I really want to focus on. This is the actual report from back in 2017, the Global Cryptocurrency Benchmarking Study conducted by Cambridge University. It's kind of fascinating looking back at what researchers were saying about XRP and crypto in general at that point in time. We're talking about a completely different world. Crypto was still in its infancy, and the number of people involved was tiny compared to where we are today. Now, to be clear, the figures in the report, between 2.9 million and 5.8 million unique crypto users globally, cover the entire crypto ecosystem, not just XRP. But that still gives us some important context about the scale. Back then, crypto ownership was still incredibly niche. Just a few million people worldwide were involved in this space. As for XRP specifically, you're talking about just a slice of that already small number. Probably low millions or maybe even less. And yes, I get it. XRP is a public blockchain, so anyone can see the number of wallets that exist. But wallet count isn't a reliable measure of user count. There are shared wallets, and many individuals hold multiple wallets. So while it's a useful metric, it doesn't give us a clean picture of how many actual humans held XRP at the time. Even so, the takeaway is this. A very small percentage of the global population, maybe even a rounding error, was responsible for driving XRP's price all the way up to $3.35 back in 2017. That's why I've been so optimistic over the years. The price skyrocketed back then with barely anyone in the game. So now, when you factor in stronger fundamentals plus growing regulatory clarity, it just seems obvious to me that we could be looking at massive upside potential. And here's where things get even crazier. According to a report from AA, a firm that specializes in tracking crypto adoption, by the end of 2024, the number of cryptocurrency users had exploded to around 560 million people. That's roughly 6.8% of the entire world's population involved in crypto in some capacity. Let that sink in. From a few million in 2017 to more than 500 million today. Here's the source. This is straight from the a website. You can see it right here. They describe themselves as a leading crypto payments company focused on providing data and insights to help businesses understand global crypto trends and unlock untapped potential. And here's the key stat. As of 2024, they estimate that global cryptocurrency ownership has reached an average of 6.8% of the population. That's over 560 million people worldwide holding some form of cryptocurrency. Yeah, that's a massive leap. And now think about this. They're projecting that by the end of 2025, we could see that number jump to somewhere between 750 and 900 million users globally. Why? Because during periods of peak market euphoria, waves of new retail speculators flood into the space. And to be fair, we're not in that euphoric phase yet. Most would agree with that. But when it hits, the scale will be unlike anything we've seen before. So let's connect the dots. XRP reached $3.35 back in 2017, and that was with a tiny global user base. Now imagine what happens when hundreds of millions more people enter the market. You can probably see where I'm going with this. With that kind of influx, how could XRP not rise significantly from where it stands today? Global crypto adoption is now happening at a much larger scale. So even if just a small percentage of those new users decide to speculate on XRP, the volume of retail participation could dwarf 2017 by a factor of 10 or even 100. And honestly, I think that's a completely reasonable projection. That said, let's keep it grounded. Just because you have 100 times more people investing doesn't guarantee a 100x price increase. Why not? Well, in 2017, the XRP market had much thinner liquidity. The order books were shallow, so it didn't take much buying pressure to push the price up dramatically. That's why small amounts of capital could cause massive spikes. But in 2025, it's a different ballgame. Liquidity is way deeper. The XRP markets can now absorb a much greater volume of buying before the price reacts significantly. That's just how mature markets work. So no, we probably won't see $300 XRP this cycle. But understanding this dynamic helps explain why price predictions in the $10 to $30 range aren't outlandish. In fact, they're very much within the realm of possibility. Which analysts will ultimately be proven right? I have no idea. But what I do know is that none of those predictions are crazy. They're plausible, based on where things are heading. And keep in mind, as I mentioned earlier, those institutions that got in early, they'll be cashing out during the retail mania. That'll naturally slow down the price surge, because as demand rises, large holders will gradually release supply into the market, and that's perfectly normal. It's all part of the cycle. The bigger point here is this. There will be an enormous number of people participating in this next wave. And if you're watching this video in late July or early August 2025, then you've beat the madness to the punch. But the mania is coming. It's absolutely coming. And just like before, those who bought early will be the ones taking profits. Meanwhile, those jumping in during the height of the frenzy, many of them new to investing, will be overconfident and convinced the price will never come down. But that's just how markets work. It's nothing new. I recently stumbled across a piece on investing.com, and even though it wasn't written specifically about crypto, what it said applies perfectly to this space. The article's less than 2 weeks old, and the headline alone caught my eye. Retail speculation is back with a vengeance. Now yes, they were talking about the stock market, and sure, that's a different environment. In crypto, we're not in a euphoric state right now. I think anyone being honest would agree with that. But the behaviors they described? Absolutely spot on for crypto too. This author pointed out something I've talked about for years. During each cycle, retail investors come rushing in, overflowing with confidence, but lacking the experience to manage risk properly. It's nothing new. The article even referenced 2021, just before the broader correction in 2022, when retail traders piled into the markets with no real plan, just momentum and hype. They even referenced an earlier article titled Long on Confidence and Short on Experience. And honestly, that's such a perfect way to describe what happens during peak mania. Searches like how to trade stocks were surging, just like they did during the dot-com bubble and the housing boom. Same playbook, different decade. Now, here's why that matters today. Even though we're not in that phase yet, XRP is already sitting solidly above $3. And no, that doesn't mean it won't dip. Markets do what markets do. But structurally, XRP has entered a new range, a new normal. It's operating at levels that would have seemed impossible just a year ago. And the reason is crystal clear. Institutional money. That's what got us here. That's the core driver behind XRP's current strength. Retail traders, they haven't even shown up in force yet. Yes, we've seen a noticeable uptick in wallet creation and general user activity. But when you dig into the actual capital inflows, the vast majority of money that's moved XRP to this level is institutional. And the data backs that up. There's not much debate on that anymore. And here's where things get really exciting. When retail does eventually pile in like they always do near the top of a cycle, that's when XRP could go parabolic. We've seen it before, but what makes this time different is that we're entering that phase from a much higher base level. Again, thanks to institutional support. It took so few people to get XRP to $3.35 in 2017, and that was without institutions, without major infrastructure, and with markets that were barely liquid. Fast forward to today. The stage is set, the liquidity is there, and the retail flood hasn't even started yet. So when I say the price movement coming could be staggering, I'm not exaggerating. We'll find out how it plays out by the end of the cycle. But I fully expect XRP to go way beyond where it's sitting today. And this right here is why I said at the beginning of the video that if you're already in at this point, this is how people get rich investing in XRP. You got here before the institutional herd. You're ahead of the game. And yes, eventually, the typical retail speculators will come rushing in, convinced they know exactly what's going on. But in reality, They'll be late. They'll be the ones buying the top, thinking the price will go up forever. They'll become the exit liquidity for the smart money, just like every cycle. And just to close this out properly, I'm not a financial advisor. None of this is financial advice. You absolutely should not buy or sell anything based on what I say or write. That would be a very bad idea.